Across the global commodities complex, the phrase structural supply deficit is usually enough to at least get the attention of discerning investors. It's a feature of the industry where the capital investment required to bring new projects online often creates an imbalance. Low demand puts the brakes on capital investment decisions for new projects, resulting in a scramble for supply when the cycle turns and demand picks up. With that in mind, the latest report from the World Platinum Investment Council makes for interesting reading. Earlier this month, the WPIC published its revised forecast for platinum and the broader PGM market in 2025. And Director of Research Ed Stirk told InvestorStream that in terms of platinum supply and demand fundamentals, the ongoing theme in 2025 is likely to revolve around a sustained market deficit. It marks an interesting trend for a sector that has largely slid under the radar in recent years, as investors chase more high-profile trends such as the rise of battery metals and more recently the re-emergence of gold in global investment portfolios. But for a sector where around 3/4 of global supply comes from South Africa's Bushveld complex, the current market dynamics could prompt increasing investor interest in emerging Bushveld producers, particularly if the sector remains in a structural supply deficit as the demand cycle turns.
The first outlook for 2025 was published back in November, and what we presented in our latest update is quite a substantial increase to the projected deficits for this year. So we're now looking for 848,000 ounces in terms of the platinum market shortfall. To give you some context, total demand is between 7.5 and 8 million ounces on a year-to-year basis, so quite a substantial supply shortfall versus demand. And this is the third year of consecutive market deficits now.
With 3 consecutive market deficits recorded, Stirk believes that while the longer-term forecast is for more of the same, the rapid depletion of above-ground stocks could see platinum's market value re-established down the track.
Now, if we look longer term, past 2025, and here we're focusing on a report we published back in January on our longer term update, then for platinum, we expect the market to remain in deficit through at least 2029. So these are entrenched deficits. They are unlikely. We're going through a period of, I suppose, quite heightened geopolitical and economic uncertainty. But having done some scenario analysis on this, we can't really envisage a scenario that would be severe enough to eliminate the deficits. So they're embedded. We're not seeing reflected in the platinum prices yet. So above ground stocks are continuing to act as that buffer, but they are depleting rapidly, and at some point in the not too distant future we would begin to expect to see the underlying fundamentals being reflected in the sort of value establishment of platinum in the market.
As platinum stocks continue to fall, a number of interesting trends are emerging on the demand side, led most by changing dynamics in the global automotive sector. Recent data in the Financial Times showed that major car makers like Mercedes-Benz and General Motors are positioning for renewed growth in traditional internal combustion engine and hybrid vehicles, amid slowing demand for electric vehicles. Given the prevalence of PGMs in the production of hybrids and ICE vehicles, Stirk believes this could have a flow-on effect for rising PGM demand.
I think it's interesting, for looking at certain car manufacturers, you can see that they do seem to be preparing for perhaps a slower pace of electrification going forwards. A lot of their business plans around adopting sort of battery electrification technology has been driven by the regulators in different geographies around the world, effectively putting in place regulations that will gradually reduce the CO2 footprint of the automakers' production profiles. And so that's forcing them towards battery electrification. But what we're seeing is that consumers don't really there's still a lot of range anxiety, there's still charging infrastructure concerns, and so consumers are more likely to buy pure ICE or hybrid vehicles, and as a result the automakers are having to try and kind of adjust for that. They're putting a lot of pressure on the regulators to try and ease some of these targets in terms of fleet-wide CO2 reduction levels. So overall, if it does come through with higher for longer ICE, which is what we expect in our longer term estimates, then obviously that's overall positive for automotive demand for PGMs.
And with the sweeping changes made by the Trump administration in the US, there are potential tailwinds for automotive demand for platinum and palladium.
Clearly, the Trump administration is trying to unwind some of the environmental commitments that the US has made. That may include easing some of the fleet-wide CO2 reduction targets. They've certainly reduced some of the support in terms of subsidies for battery electric vehicles at the consumer level. And all of this may translate, for that geography in particular, obviously higher for longer automotive demand for platinum. It's worth noting as well that 2 other things. One, US consumers, they've got a big preference for those large pickup trucks with big gasoline engines in them. That tends to be more favourable towards palladium demand than it is for platinum. So, that's something to think about for the future outlook as well.
On an operational level, global platinum supply was bolstered in 2024 by stronger than expected output from the likes of South Africa. However, the World Platinum Investment Council is forecasting mine supply to contract in 2025 to a tick over 5.5 million ounces off the back of projected reduced output, down from 5.76 million ounces in 2024.
The kind of ongoing trend really in mine supply from the established producers is a reaction to the pullback in the prices of palladium and rhodium that we saw over the past couple of years, and the impact that's had on their profitability. The established producers have been focusing on restructuring efforts to try and reduce their operating costs effectively. They've been, to a certain degree, relatively successful with that in terms of making their operations more sustainable, and so they're not under quite so much pressure as they were previously. But one of the side effects of these restructuring operations has been ongoing consistent erosion of mine supply from South Africa. Now, 2024, the figure that you mentioned there, was actually boosted to a degree by a release of work in progress inventory. So that's concentrate that was mined or produced from ore that was mined in previous years, but hadn't been smelted and refined. And given some additional smelter capacity being available, principally due to the improvement of the electricity supply situation in South Africa, some of the producers were able to push through some of that work in progress concentrate, and that effectively inflated the 2024 output number that we reported. We're not expecting that to come through to the same extent in 2025.
But as automotive platinum demand continues at robust historic levels despite headwinds, Stirk remains confident that more platinum supply will be needed in the medium term to accommodate the looming hydrogen economy, and he anticipates that South Africa will continue to lead the charge on that front.
Certainly, there's really no incentive for the established producers to try and increase output at the moment, so the ongoing deficits that we see in the market are likely to stay in place. And certainly, given the medium to longer term outlook for significant growth in hydrogen demand for platinum, we're going to need more platinum supply in the future to accommodate that hydrogen economy.